Hello, and welcome to a new week and also a new episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX. So once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. Hello, and welcome. So, as you all know, this is a new week, so there's quite a lot that we're expecting. So we'll begin by checking out the economic calendar, see what we're expecting for the week, and then trade while being informed and more understanding of what's currently happening. So first things first, we know that today we have a bank holiday in Canada, so we expect low volumes from CAD pairs. So going forward, we'll be expecting big news happening tomorrow in the morning, and this will be the Bank of Japan core CPI, which is basically a measure of inflation in the Japanese economy. So besides this, we'll be looking at manufacturing as well as services PMI for the Eurozone tomorrow, and this will be happening at 11 a.m. Then later on, we'll be focusing on the manufacturing and services PMI for the UK. Also, we'll be having the same manufacturing and services PMI for the US, and these will be at 4:45 p.m. Then later on, we'll be having retail sales data coming from New Zealand. This will be on Wednesday, very early in the morning, just 1 hour 45 minutes from midnight. Then the most important news for Wednesday will be the Reserve Bank of New Zealand interest rate data, where it's expected that the Reserve Bank of New Zealand will go for a 25 basis points hike from 5.25% to 5.50%, which would make it the most aggressive bank in terms of interest rate hikes. So with rates this high at 5.5%, then we'll be expecting something to crack. So on Wednesday, we'll also be looking at the core CPI for the UK as well as CPI. So this will be the biggest drop that we'll be expecting for UK inflation from 10.1% to 8.2%. So if this happens, then it will be in line with what the Bank of England is expecting. But then if inflation remains closer to 10.1% or even higher, then this will make it a very big challenge for the Bank of England to keep controlling prices. So in this case, we're expecting a sharp drop, but if this doesn't happen, then the Bank of England may have to go for stronger rate hikes. So we'll also be looking at the producer price index as well as a retail price index in the UK at 9 a.m. on Wednesday. Then later on, a speech from Bank of England Governor Bailey, and then another speech by the same person at 4 p.m. Before we look at FOMC meeting minutes. So this will be happening at 9 p.m. on Wednesday. So then we'll be moving on to Thursday. Here we have the GDP for the US. So this will be happening at 3:30 p.m. So we're expecting that the US economy grew by 1.1% over the first quarter of this year. So we'll be comparing the outcome with this expectation of 1.1%. Then we look at the Tokyo core CPI. This will be at Friday, 2:30 a.m. Then we also look at retail sales from Australia as well as from the UK for 30 a.m. and 9 a.m. on Friday. Then core PCE price index. So core PCE price index is a very important data point, mainly because the Fed or the Federal Reserve Bank of the US considers this data in their mix or in their cocktail of data points that they use to make decisions about interest rates. So the outcome of the core PCE price index will be very influential in how the Fed reacts on its next meeting. So we'll be expecting to see increased volatility on the release of the core PCE price index on Friday at 3:30 p.m. And of course, the volatility is expected to be higher on USD pairs as well as US equity indices. So now that we are through with that, and that's the economic calendar, we know that there's quite a lot happening on the charts. So, but before we talk about the charts, we should know that the US is expected to default on its debts if the debt ceiling is not adjusted by the 1st of July. So today being the 22nd, basically leaves us with about 9 days So within those 9 days, if the US doesn't come up with a plan to expand the debt ceiling, then we'll be expecting the US to default on its debts. And this could be catastrophic for the equity markets. So this remains the top theme for the week. So as we go ahead on the week, we'll be following closely on the debt ceiling negotiations, where the US is currently at $31 trillion in debt. They are currently looking to expand the debt ceiling so that they can print more money and use that to run government services. But then if this doesn't happen, then it could be quite catastrophic. So the real issue of contention is that the Democrats also, they have their own bills that they would like to pass through with the same bill of expanding the debt ceiling. And at the same time, if the US actually goes for an expansion of the debt ceiling, then its debt obligations will get higher, meaning that it will be paying more interest on its current debt. And by expanding the debt ceiling, basically allowing the US to take on more debt, then the current payments towards its existing debt might be similar to the military budget in the US, and that's a key issue of concern. So we'll be following on that closely. Hopefully, we'll be able to understand the negotiation progress. And once we understand that, then it will be easy to identify trading opportunities in the markets. So if you have any questions or comments, feel free to type that in the Q&A section or in the live comment section, and I'll be happy to respond to that right away. So hello, Felix. Hello, Patrick. I'm seeing Minister of Coins and Notes. Hello, Rodney. Hello, Vandy, Derek, Esther, and Max. Hey, Tony. Welcome back to the session. Hi, Charles. Thank you. Thank you for your response. So we have quite a good comment here and feedback. Congrats to FX Pesa for spreading wings to the UG. So big news, yes, we have a new branch in Kampala, Uganda. And for those of our clients who have been missing out now, we should know that we have boots on the ground in Kampala. So if you need any of our sessions, education, and market analysis, then we'll always be there to get you the information on time and help you understand what's currently happening in the markets. So that being said, if you are looking at this chart, then you know that the S&P 500 managed to break out of the diamond on the daily time frame. So this was the diamond. So the market was having increased volatility and then reduced volatility, eventually breaking out towards the upper side, in a testament that investors are currently betting on a very strong hot market, or basically the end of the bear market. So far, the S&P 500 has been testing higher highs, and it seems like we are now in a territory where the market is testing a major resistance. So this resistance level has been in existence since September last year. So if the S&P 500 manages to break above this resistance, and this is a price level of just around 4,212, then we could be seeing a bull market rally happening, especially when you consider that investors are already betting that the Fed will stop hiking interest rates and go for rate cuts. So in that case, we'll be expecting a very strong stock market. And also the US Tech 100 seems to be the most aggressive one. So the NASDAQ has really rallied, and this month we haven't seen a stop. So since the beginning of the year, the beginning of the month, we had the first 4 days of May, the NASDAQ 100 going down. But then since then, you can see the continued momentum upwards. So last week on Thursday was the most bullish one before the market took a break on Friday, pulling back down. But then if you look at the opening today, there was a small gap to the downside. The market managed to close that gap, and it seems that like we're moving higher. So Friday's high might be our next target for today if we continue to see this bullish momentum in the NASDAQ. So the weakest one has been the Dow, but yet it's still managing to print some good movement to the upper side. So in this case, you can see there's a major resistance around this area and also around Friday's high. So at the beginning of the month, we managed to trade from this resistance. And since then, the market has been attempting to go back downwards. But then, as you can see from today, we opened with a gap downwards. We closed the gap, and there's a good chance we'll be seeing some higher prices for the day. So as for the dollar index, it's very important to understand what's happening with the dollar currently. So clearly, the dollar index was trading inside this triangle, basically consolidating or moving sideways before breaking to the upper side. And as you can see, for the last 9 or 10 days, the dollar has been really strong, save for Friday, where it managed to move back downwards. So from the forward chart, this is how it's looking like. So market pulls back down, and then today it seems like the dollar started the week off on a strong foot. So there's a good chance we'll be seeing a much stronger dollar for the rest of the day, and this could guide our trading in forex as well as in commodities. So for the major pairs, if you look at the pound USD, this is what we are happening to see. So a market that is consistently moving downwards. So there seems to be a trend line that is seemingly coming out of this. So you can see an area where the market is finding resistance and going back downwards as testament of the strong dollar. So it's very important that we understand the key price levels. So there's a major support level around 1.23496. So right now that the pound is moving back downwards, there's a good chance we could be headed there, but the immediate target seems to be Friday's low. So the low that we saw on Friday, which was 1.239, so the area around 1.239 seems like a short-term intraday target. And if we keep seeing the dollar being strong for the week, then the market could even be headed lower at around 1.23496. So for New Zealand USD, the currency has been pretty resilient, making an impressive recovery here when the dollar was really strong against other currencies. So we didn't quite get to our target of 0.631 last week. And now it seems like the dollar index is persistently strong. So going forward, we know that we're expecting a lot of news to be coming from the Reserve Bank of New Zealand, including the interest rate data. So this week, we would be expecting the New Zealand dollar to be making a recovery. So just by observing the chart, you can already see there was a very strong bounce from 0.61831. So the market didn't quite get to back to the same level. So from here, you can see there has been an attempt to keep pushing higher. So we had this resistance at 0.631, market pull back downwards. So there is a good chance we will be seeing the market make a good recovery. So areas that could represent a potential entry point seems like the low of the day, 0.62570. So if the market happens to get to this point here, as testament of the strong dollar, then looking for ideas of buying the New Zealand dollar against the dollar could be an area of interest. So 0.62570 seems to be an interesting data point, being the low of the day. So for the euro, clearly bearish momentum. So for now, this is not something we can even argue about. It seems like the euro is consistently forming lower highs, and now the market just rejected another high. So from here, we can see there's an trend line that is being rejected here, and the euro is headed down lower, perhaps to Friday's low. So here, the market having rejected this upper trend line, there's a good chance we'll be seeing even lower prices. So very short term at 1.07874. And also, of course, the low of Friday seems to be a good target for today at 1.07602. So USD CAD managed to break outside of this particular triangle. So just want to rectify this. So this is a trend line here. So it's a very slight break. You can see the big swings that the market was making, up and down, and now it seems like we have a break towards the upper side, basically implying that the US dollar is currently very strong compared to the Canadian dollar. So we could be expecting some further upside to be happening in this one. So these kinds of breakouts tend to be very nice, especially when you consider the base of the pattern. So the base of the pattern seems to be this area here, or the biggest move before the triangle was formed here. So in this case, there's a good chance we could be seeing the market moving even higher and then completing this movement here. So among the shorter term targets would be the previous high. So we could be seeing the USD CAD pair just get to the top of the pattern here. This is 1.36422. And of course, if it happens to break, then all the way up the previous resistance. So we could be seeing a very strong momentum happening in USD card currency pair, and the market extending all the way up to 1.38569. So the idea is to observe the breakout here and then execute positions once you have confirmation of the breakout. So USD JPY also doing really well in the recovery. So on the 15 minutes chart, we can see that the market was pulling back downwards on Friday, but today being Monday, it seems like we are getting some energy and the market may be pumping higher from this point onwards. So the trend has been pretty much the same. The market consistently pushing higher and recovering from what we experienced in the last 34 months of the year, last year. So this year has been pretty resilient, save for March, where the market was pulling back downwards, but the fundamentals are the same. So we'll be expecting some further upside momentum to be happening in USD JPY currency pair. So yesterday's, so Friday's high seems to be a nice short-term target for the day. And now when you focus on gold, you can see it was a pretty bearish last week, and we'll be expecting something similar this week. So as long as the US dollar remains strong, then we will be expecting the gold prices to be going back downwards. So this was an all-time high for gold at 2087. I believe that was the high, actually 2086. So since then, we have seen price pushing back downwards. The following week down, and last week even lower. So this week we'll be expecting to see some further downside in gold, as we see investors shifting from risk off to risk on mode, where they are willing to take more risk by trading in equities compared to the safe haven in gold. So with this happening, then some further downside momentum is expected in gold, and of course the short-term target seems like that's days low. However, if we happen to see some further upside in gold making a recovery, then the target will be 1999, or the price level just below 2000. So as for, I believe I've covered all the major top indices. I've covered currencies, so it's only Brent oil we haven't checked on. So this one has been moving sideways. So sideways here breaks to the lower side, gets into another range, upper side gets into another range, and now we are seeing some form of recovery. So from the forward chart, this is how it looks like. So we can say that for the last 2 weeks, we have seen Brent oil basically moving sideways. So we don't have a clear break or clear directional movement yet. So for now, it might make sense to look for very short-term targets and not very directional trades. So from here, I believe we can all see the kind of consolidation that's happening with Brent, and the consolidation is forming some form of pattern here. This being the resistance and the support being somewhere along this path. So it's basically a market that is moving in a sideways momentum. So from the forward chart, it seems we have a really nice bounce currently happening since the last 1 hour. So we could be seeing for the rest of the day, the price of Brent oil attempting to move towards the upper trend line, and this could be the trade for the day. So thank you very much, guys. As we all know, these sessions are not investment advice, neither are they recommendation to trade. So you should always do your own analysis and, of course, practice due diligence. So is there any available WhatsApp group for traders? No. Telegram group, yes. WhatsApp group, no. The US debt ceiling extension has been fully signed off. Essentially, what's the effect of this? I don't think it has been fully signed off. Maybe I'm checking at the wrong news. But if the debt ceiling is expanded, it basically means that the US will borrow more money. It will basically create more debt in order to continue funding its activities. And if the government is allowed to do this, then the obligations on its debt get wider. So it basically means that the US will be paying more money. So the US will be collecting more taxes and using that to pay its debt. And what this means is that there will be a bigger load, and there will be less money available to honor other projects within the US. So it's still a very heavy political issue. So we have 2 Telegram groups, So one is personal, the other one is from the company. So if you go to Telegram and then you search FX Pesa, you'll find the FX Pesa group. And for my personal group, I'll be sharing this on the comment section. So hopefully once you get this, I'll get to understand what other traders are seeing on the group. So thank you very much, guys, and I hope to see you on the next session.